All right, it is 6:03, so we are going to get started with our class. Welcome everybody to Let's Make a Loan. This is episode 1, Take It from the Top. I see some familiar faces, but for those who don't know me, I'm Todd French. I am with Hawaii Mortgage Experts. I'm a mortgage advisor, and we do all types of loans in Hawaii. So conventional, VA, jumbo, anything residential, we can help you out with. For those who follow me on Instagram, thank you. For those who don't, there is my Instagram handle, and you can just scan that QR code and follow me. It's a mixture of funny stuff and also informational, but I try to keep it pretty light, you'll see. I just recently launched my website, www.mortgageguytodd.com. You can also just scan that QR code, and I have a lot of great resources on there as well. All right, so why are you here? You are here to learn. Studies show that home buyers who are more educated save on closing costs. They make more educated decisions, and just like anything, information is power. The more you know about it, the better off you're going to be, the more confident you're going to be. And you're also here to ask questions. That's the whole point of coming to a live lesson like this. So at any point during it, if you want to unmute yourself to ask, or if you just want to type in the chat, that works. And you're also here to share your camera. I'm going to be making some jokes. Most of them are probably going to be bad, but it does help if I can see you smiling or laughing. It kind of keeps me going and makes this a lot more interesting. So thank you for sharing. So real quick, this is a very basic mortgage 101 type class. So we're going to go over where to start, types of mortgages, down payments. We're going to go over some myths on mortgages. And I'm going to try to keep this to 30 minutes or less. And that way we have more time for Q&A at the end. My goal here is to educate. Once you have a baseline level of knowledge, it gives you a greater ability to know what other questions to ask. And that way you can price shop successfully. Again, you can make more confident decisions. And my goal is to give you the tools to succeed in your home buying journey from the financing point of view. Where to start? First, you have to ask yourself, why are you buying a home? Is it your primary home? Is it going to be an investment? Maybe a combination? And the most common question I get asked is, when is a good time to buy a home? Honestly, the best answer I can give is when you're ready. In Hawaii, the market just keeps going up and up and up. Sometimes it's a little bit flatter, and during the pandemic, it just shot right up. But don't try to time it thinking, oh, we're at the peak, home values are going to go down. That does not seem to be the case. When you're ready is the time. So don't look at the rates and say, oh, they're high right now, because you can always refinance. And then once you're ready, the first step is to get pre-approved, maybe with me. What is a mortgage? Super basic mortgage terms for those who have no previous knowledge. When you hear the term lender, that's the company that funds your mortgage loan. I work with local banks, I work with mainland banks, I work with internet banks. Basically, depending on the home you're purchasing and your financial profile, I will work with whichever bank is the most beneficial for your situation. The borrower is the person receiving the mortgage loan, that's you. The down payment is how much cash you bring to the transaction, so how much you put down, and sometimes this is in terms of a percentage, and sometimes it's a dollar value. The loan amount is the money still owed on the mortgage loan, sometimes called the principal. The loan term is the amount of time that you have to pay back the loan. Usually it's 30 years. The interest rate is the borrowing rate on your mortgage. Just like your credit card might be 25% interest, this is the borrowing rate on your mortgage. Escrow is an account that you pay your insurance premiums and real estate taxes into. So in addition to the principal and interest on your mortgage payment, the lender also collects for the insurance premium and the taxes. And that is your lump sum mortgage payment. And if you want to get technical, this is the definition of a mortgage. In other words, it's a loan for a home. For the visual learners out there, say you have a $500,000 home purchase price, you put down 20% or $100,000, your mortgage is $400,000 or 80% of the total home purchase price. The most common is the fixed rate mortgage. This is where your mortgage payment stays the same for the entire duration of the loan, usually 30 years. Then there's the adjustable rate mortgage. So it's fixed for a period of time, the intro period. So that can be often it's 3, 5, 7 years, etc. And then after that intro period, it adjusts based on the market rates. The reason why somebody might choose an adjustable rate mortgage is because the interest rate can be lower that first period. It's called your teaser rate. But also, if you're not planning to own the home for very long, you're only in Hawaii for 3 years, or you plan on upgrading to another home in 5 or 7 years, an adjustable rate mortgage might make more sense. Also, right now, given the higher interest rate environment, you are likely to refinance your mortgage, in which case, at that point, you might go towards a fixed rate mortgage. Also, very common in Hawaii is the jumbo loan. These are loans that are greater than 1.15 million in Hawaii. There are also several different government-backed loans. The most common are FHA, USDA, and VA loans. FHA loans are great for borrowers with lower income and who have a lower down payment. You can put down as little as 3.5%. They're also great for borrowers with lower credit scores. They're much more forgiving. USDA loans are great for buyers in suburban and rural areas. You can put down as little as 0%. There are income requirements that must be met, but they are awesome for those who have no down payment. They're also more forgiving for borrowers with lower credit scores. And then there is the VA loan, and this is an amazing one for active and retired military. You can also do 0% down for your home purchase. There are so many different types of mortgages. A lot of borrowers get intimidated, wondering which type they should get. Well, the answer is it depends. It depends on what your objective is. So are you looking for a low interest rate, low down payment? And, as a mortgage advisor, that's my job to take a look at your overall financial profile and kind of determine which option I think would be best. And a great way that I do that is with this Mortgage Coach software. And it allows me to provide side-by-side comparisons of different loan options. And I would walk you through that, making sure you understand it, and then help you make an informed decision from there. I'm an Excel guy, but Mortgage Coach is a really nice format to display the different options. It also depends on how long you're going to own the home for. Again, that's where you might choose an adjustable rate mortgage versus a fixed rate. And of course, what's also very important is which types of mortgages you qualify for. Depending on your income, credit score, or how much you have saved up for down payment, that will help determine what types of loans you qualify for. Sources of down payments. So people often think you have to get your down payment from your checking or savings account, but there are a lot of different other options. You can also pull from your brokerage account, so stocks and bonds. A lot of 401ks have great options that employers allow you to borrow against. With a traditional IRA account, you can take up to $10,000 for a down payment on your first home. In many cases, with a Roth IRA, you are able to withdraw your contributions for any time, any reason, tax and penalty free. This is a great option. Personally, I've actually done it twice now. It worked out really well. Cryptocurrency can be used once it's converted to the US dollar. Insurance policies have a cash value. This is something you could check with your insurance broker on. And of course, you can receive money as a gift from potentially a very generous family member or friend. And there's also the option of getting a HELOC. This is a bit more of an advanced method, and we'll get into that in a future course, not for today. So then there's the question, how much should you put down? Well, again, it depends. There are some banks that offer as little as 10% down for first-time homebuyers without any mortgage insurance. Oftentimes, if you have less than 20% down, then there is mortgage insurance required. Even if you have the money to put down, it might depend on what your long-term plans are. If you'd rather keep that liquidity in your investments, then putting down less might make more sense. And again, this is something that I provide for my clients with a side-by-side comparison. So once you have a property identified, we'll take a look at, okay, what is your monthly payment if you put down 5% versus 10, 20, and so on. And as the great Walt Disney said, the way to get started is to quit talking and begin doing. So if you're ready to buy, then it is time to apply. There is a difference between pre-qualification and pre-approval. In order to put an offer in on a home, selling agents require a pre-approval. And both of them are free. The pre-qualification is great because it does allow you to get a ballpark idea of what you are qualified to buy. But the pre-approval is a lot better because you know exactly how much you are qualified to borrow. So what is needed to apply? Pretty simple process. I have a secure application where you can upload documents, put in all your information. For a pre-qualification and a pre-approval, I would need a credit check. The big difference between the two is pre-qualification is kind of just giving me the numbers, whereas a pre-approval is I have verified the documents. So taking a look at your pay stubs, bank statements, etc., and verified that what you're telling me is true. So let's take a look at some mortgage myths. Many think that a lower interest is always better. They're super frustrated by the fact that the interest rates are higher right now, but I challenge you to talk to somebody who bought during the COVID boom. Many buyers were putting in offer after offer after offer and getting outbid because they had 20 other buyers they're competing with. Ultimately, after so many offers, they were putting in offers on houses they hadn't even seen yet. And what happened as a result is some people ended up in a home that they weren't necessarily really happy with. It was just the only offer that got accepted. In addition, some people waived the inspection and then ultimately found out all these problems with the house that they could have potentially avoided or would have made them not want the house in the first place had they had the inspection. And beyond that, many people were bidding 10,000, 20,000, 100,000 over an asking price, potentially overpaying for the house. So now with the higher interest rates, we are in a position where buyers can be a little bit more strategic about their purchase. They're not competing with 20 other buyers, so they have a little bit more time to think. They can actually see the property, walk through it maybe once, twice, 3 times without being forced to put in an offer in the next day and not even having a chance to think about it. One of the biggest myths is that you need 20% down. I've already gone through several options where you can put down a lot less. And a lot of the myths revolve around credit as well. And let me get into that. Many think that a credit inquiry is going to destroy their credit. And I just want to illustrate here how little of an impact pulling credit has. So as you can see in this pie chart, new credit accounts for 10% of your total score. It's largely how much you owe versus how much credit has been extended to you, and then if you have been making your payments on time. New credit, just this little wedge, 10%. It's also really important to know how credit inquiries work. Before banks lend you hundreds of thousands of dollars, they want to know, are you going to make your payments on time, and are you going to even pay us back? What's also really important to know is that within a 14 to 45-day window, depending on the credit bureau, multiple checks from mortgage lenders are only recorded on your credit report as a single inquiry. Banks basically know that you're only going to buy one house. It's not like applying for multiple credit cards. Another big thing that scares people off is thinking my credit is bad, I'll never qualify. They start feeling so bad about themselves. But fortunately, the government has many different loan options for borrowers with lower credit scores, as low as 580. So what to do now? Well, if you're ready to buy, then it's time to apply. And if you're looking more like 1 or 2 years out, it's also a great opportunity to see, okay, where am I at now and where do I need to be? And then you're able to strategize the steps along the way to get you to that spot. It's also the time to keep learning. Again, studies show that educated borrowers do better off. It is also the time to keep learning. I'm big into education, as you can tell. And it's also time to not be scared. Buying a home is an intimidating process. Even if it's your second, third home, it's quite cumbersome, but with the right team in place, with the right lender, with the right realtor, we can help you through it. It's not going to be too bad. Don't worry. It's also the time to ask questions. I'm available anytime. Just let me know. For future courses, I'm going to go over points, 2-1 buy downs that you might have heard about. I have a great tool to evaluate whether it's better for you to rent or buy, how to figure out what your debt to income ratio is, different tools for budgeting for the cost of home ownership. But what's most important is what you would like to learn. If you have any specific topics that you would like me to discuss, I'm happy to go over them. These courses are meant for you, so please let me know. Thank you so much for attending this course. I really appreciate it. I'm going to now open this time up for questions. I'm going to stop the recording, so this is totally off the record. And if you think of something later, here is my contact information. Just shoot me an email, call, text, and I will get back to you.